Hey, everybody. Welcome to the morning market briefing. It's Monday, June 22nd, 2026. Hope you're doing well out there. Tom, Ben, how's Father's Day?
It's good.
Good, wonderful.
Yeah,
Watched a lot of golf, which I enjoy,
that's a great day.
and made some money betting on it. But Wyndham Clark won, and I don't care for that guy. I don't think anyone does. A lot of boos from the crowd.
Yeah, I don't know enough about him other than him. Where was it, Oakmont, that he destroyed the lockers?
Yeah, he destroyed the lockers at Oakmont after not making the cut.
Seems like a good guy.
He's a big head case. I'll tell you what. There are two things that annoy me. One is that you can always hear it on the mic. He's like a big time needs a shrink guy.
Yeah.
Late bloomer in his career, struggled with mental health issues, and now he's got a caddy who, when he hits a good shot, goes, good process, which annoys me. They often interview his sports psychologist, which just looks like somebody's mom. And this is a very niche complaint, but I can't tell you exactly what about it, but either the shape or the way he wears his hat annoys me. It doesn't. He looks like the kid from The Sandlot.
I was gonna say it's almost like Lego blockish.
Yeah.
Like they're not quite the same size.
Now, are those legitimate complaints? Probably not. He's probably a perfectly nice guy, but
Yeah.
It's all about the storylines. What happens between the 3 seconds it takes to hit the ball.
I love it. Yeah, Father's Day was fun. Weather was a lot better than expected, so that was great. Kids got me an NBA Jam arcade game.
Ooh.
So, been on fire.
Yeah.
People would say boom shakalaka. So,
Man, do the codes still work?
yes,
Oh, let's go.
it's very fun. Lots of news coming out of Iran over the weekend. At any given moment, I feel like I would pick up my phone, Ben, and X would be reporting one thing, and it'd be widely reported and parroted, and then several hours later, I'd look again and be like, oh, the narrative has totally shifted, and yet we're in a spot where has anything substantively changed? And no, I'm hoping that maybe this is a one-and-done type weekend in the sense of the amount of attention it got with these back and forth. We're not coming to negotiate. Oh, we're here to negotiate. We're not doing anything. We're going to make J.D. Vance look like a clown. Oh, things are actually going pretty well. I feel like people are going to get exhausted by that cycle if we do it every time these talks are supposed to take place, and these talks are going to take place over a period of months.
Not to mention the algal balloon and
a lot of algae and pro-algae protesters. Very strange.
It was a busy news weekend. I couldn't keep up with it. I tried, but if you were driving, after 3 hours, the Hormuz Strait would have been open, shut, and then everyone would be threatened to be killed, and then it was going to be open again by the time you got back. So that was kind of how the weekend went. I think that, at the end of the day, we're here Monday morning, and they've talked all through the night. Both sides are saying there was tremendous progress made. J.D. Vance is now leaving. Everything's kind of good right now. Pakistan and Qatar are mediating the talks. They also spoke of encouraging progress. The 10-year is up a couple basis points this morning. I'm not sure really why that's the case, 448. When I checked earlier, crude is roughly flat in the mid-70s, stocks roughly flat. I think that in general, people are just ready to move on. I harbor some more concerns as we get into Q3 and midway through Q3 and closer to the midterms. But for now, I think that there should be some relief in the economy.
Yeah, Tom, any explanation for you on any of the rate movement?
I think it's just people think inflation is higher than it actually is. There's confusion around oil, and there's clearly unrest. We did get Canadian inflation came in at 3.2, which is going to continue to make people think that inflation is going through the roof. Just continues headline after headline uncertainty. People are starting to talk about the debt thing again. It's just a lot. And so I would say all indicators are pushing for higher rates, but I think that we're going to hit a wall here sometime in the next 6 months.
I'm excited to talk more about Kevin Warsh later.
Yeah, we'll come back to the Warsh dog. Meanwhile, Keir out.
Yep. Looks like this guy by the name of Andy Burnham. He was just voted into office, and he has his eyes set on the prime minister role, and Keir Starmer is getting pushed out. There was very little confidence that he would be able to win and beat Nigel Farage in 2029 when the next general elections are held. And so Keir Starmer is exiting. He says, I don't know if it's the right thing when you say that you exit with grace, but he's saying he's exiting with grace.
I think you can call it. I think you can, I think you can do that.
So he says, I've heard the answer for my, I don't know why.
Keep doing it. Do it. Do it.
I've heard the answer of
The
my
answer.
parliamentary party to that question. I accept that answer with good grace.
Man.
So 5th prime minister in 4 years in the UK.
They're going to start having to roll out the Cleveland Browns quarterback jersey.
Yeah, we've got to get it. We've got to get it. Just duct tape another name on there.
The question is he Johnny Manziel? Is that
Does this, from a market perspective, obviously there's plenty of consideration given who looks likely to take over, but what's your read on economic implications of this, if there is one?
I mean, I think it's just doubling down on the labor policies, which are more socialist policy. He described himself as a socialist, this Burnham guy in 2010.
He's a Manchesterist.
Yep. So now his big claim to fame is making, I don't know why they come up with these things, but the bus system in Manchester is called the Bee Line, BEE, like a buzzing bee.
Yeah.
That's his big thing. Like, man, I came up with the Bee Line in Manchester, and therefore I should be Prime Minister of the UK.
Manchester, I barely know her. Tom, let's talk about conference last week, and you weren't here for the full diagnosis of Kevin Warsh. Just take us on a tour of your thoughts.
Yeah, I think I don't know if I'll go back to that conference again. It seems like everybody is not comfortable. So, I mean, the speakers are people who run like State Street ETFs, Vanguard ETFs, all the fixed income, the biggest money managers in the world. Notably, BlackRock was not there. And the narrative continues to be inflation is a real problem. The war is a real problem. Basically all the things we talk about that are probably going to come to a close sometime in the next couple of weeks, even though at that time we were not having the Strait of Hormuz maybe shut again narrative at all. I think they just didn't have time to come up with a new idea, but it was a lot like sitting in a windowless room and watching CNBC all day, which wasn't great. But I think the takeaway is that people aren't thinking intuitively about this. They aren't taking into account the structure of the bond market. I will say there were a couple pieces that I thought were interesting. There was one guy who he moderated a panel and he ran a smaller RIA. He was probably 20 times bigger than us that just did fixed income. And he was talking about, man, there's so many opportunities in convexity. There's so many opportunities in mortgage backs, all these different ways you can attack the bond market right now because rates are so high. And he kind of got just sort of stiff-armed at every corner by these people who were like, no, that's too dangerous. You need to stay short.
Don't share your good ideas.
Yeah.
And by the way, if you stayed short on Wednesday, you got smashed.
Destroyed.
The 2-year was up like 20 basis points and the 30-year was down.
Yeah, that's the sneaky narrative this year is that.
So you did better in the 30.
We're starting to get pretty positive on a lot of bonds that were bought in that 530 range because one, the duration move as a function of the yields dropping is huge, but also your beginning yield is so powerful. There was one high yield guy that was just like, you should just always buy high yield. Spreads don't really matter because at the end of the day, you start at such a high yield in a short duration that you make more money than the bond market every time, which is true. You got to be careful with the credit because that's obviously where more blowups are. But that is something to really be considering is the starting yield on any bond is most important. It covers a lot of errors. It covers a lot of, we call it hair in the bond business. If you got a lot of hair on a bond, a lot of yield will cover for that pretty quickly. I don't know. I thought it was fine. It's just good to hear what other people are saying and know that they're directionally incorrect, and then you can continue to do what you're doing.
Yeah, it presents itself quite a bit of runway for you
Yeah.
if the big guys aren't jumping into the space we want to be in.
Yeah, there was a macro where everyone was talking about, well, jobs market might not be as strong as it is, and inflation might actually be coming down. This war is coming down was a question, and the guy was like, well, yeah, he's like, that's obviously true, and certainly it looks that way, but have you seen Chinese PPI lately? And I was just like, oh my God, this guy. So he's like, that's the real canary in the coal mine is Chinese PPI. And I was just like, all right, well, this guy, I think this guy's wrong. And he was like Norwegian or something. I'm not sure where he was from. He had a funny accent, but it was like wherever he was from, the other guy was Canadian on the panel, and the guy who was moderating was British. So it wasn't exactly,
wasn't in America.
Yeah,
250.
they didn't have the right mindset, if you ask me.
Yeah, yeah. What are your thoughts on Warsh's first go around last week?
Man, I was fired up. I was watching it at the airport. I think this is the way it needs to be. I think the biggest point is that he wants the market to take over price discovery on rates, which is to say, you think about what's the price of Apple. There's 8 billion people who are all operating in the economy, and it trades hundreds of millions of shares a day. So the price is what the price is. And unless there's some surprise information, which of course there's very little on Apple because it's one of the most covered companies in the world, the price is right on any given day. It's right because that's how there's so much information. Everyone is participating to find that price discovery. Bonds are not that way. They're certainly not that way when it comes to the federal funds rate. You've got all these people who are like, well, I can't deploy capital because the Fed might do this or the Fed might cut or they might hike and I can't do anything. And everyone freezes talking about what the Fed's going to do. But if nobody knows what the Fed is going to do, the market has to then start operating. People have to say, well, I don't know what the Fed's going to do. Kevin Warsh didn't say anything about what he's going to do. So I just have to make a decision for myself. And I think that that's a more effective way of price discovery in the market, whether it's I'm going to build a building, whether it's I'm going to issue bonds, whether or not it's I'm going to buy Apple stock. All of those things should be, the invisible hand, Adam Smith. We got to figure out where the level is, and we're all going to do this together. And some people might be right, some people might be wrong, but the market is finding that. Like what's the price of a house? Well, it's what someone's willing to pay for it. But if the Fed says that it's 375, then no one's going to pay 4% for it, $400,000 for it, because the Fed, they could cut the price of this house and it could be cheaper. So I'm not actually going to do anything. If you think of it that way, I think it's good. I would love to see them. I've talked a lot about expanding the range from a 25 basis point because then it could self-correct. If things got hot, the federal funds rate could rise to 4.5%. But if things got cold, it could fall to 3.5%. And the Fed wouldn't have to do anything. The market would decide for itself where the proper rate is in order to self-correct. So I think that's the way we're moving. What that looks like functionally is going to take some time. But I think that, he talked a lot about his task forces and figuring out new ways of measuring inflation. If he can get that right and start to let the market decide on rates, then I think we're going to be in better shape.
And yet, I find that all the articles that I was reading over the weekend are all about the same things that we've been talking about the Fed for the past number of years. Fed's preferred measure of inflation coming out this week, the May PCE inflation, when Kevin Warsh told you explicitly that he's not looking at that data anymore. That's echoes of history, he said.
Yeah.
And then I think that people even talking about the 25 basis point increments. I think that if Kevin Warsh changes rates at some point, I don't see any reason why he would keep it at 25 basis points. He might, but I think he could just as easily move by a point or 2 points. I mean, if the job creation that we had over the last 3 months and the construction jobs and everything was pulled forward ahead of the World Cup, because we know that we're not doing construction in Atlanta right now because of the World Cup. We know that we hired a bunch of people in leisure and hospitality for the World Cup. We know that AI spending just went through the roof ahead of all these IPOs. And if that hits a little bit of a wall in the second half of the quarter in Q3, I could see him cutting by a point or two.
Yeah, I mean, I think it's a new ball game, and he's making it more Wild West, but that's how the markets are. I mean, look at oil.
But he likes that, and it's not surprising. I mean, even given just the commentary, Tom, that you just shared from the conference, where everyone's kind of saying the same thing. You feel like you've been in a windowless room watching CNBC all day. When you boil down the tone of the criticism of Warsh, specifically from the media, not talking about investment professionals necessarily, but specifically from the media, the criticism is essentially either we don't want to have to think in a different way or we refuse to.
Yeah, I mean, it gives you the opportunity to make a play. That's the thing is it's just like the world is your oyster when nobody knows all the information. if you start to do like, hey, we're not thinking about cutting rates or hiking rates, it's like, all right, well, I know I can continue to operate this way because they're not going to do it. But if in your scenario, Ben, if it's like the Fed needs to raise rates over 4%, we're sitting at 0. If you say, hey, we might raise it 4%, we might raise it 2%, suddenly you've got to make a decision, and you can make or break. You can make a lot of money, you can lose a lot of money, but you've got to make a decision, and your input drives markets. And the market, there are going to be all those people will then make those decisions, and then the rates will rectify themselves. And look at oil. A war kicks off in Iran. The natural reaction of the market is oil prices should go up. It looks like it's closing, they should go down. Donald Trump didn't do that. Kevin Warsh didn't do that. Jay Powell had absolutely nothing to do with it. In fact, his decision was, we don't know anything.
Yep.
And so
who knows what this is?
Yeah. And so everyone had to make their decisions, and there was money made and lost on oil based on market forces, and everyone had a decision in that. We made decisions. Everybody else did. People hedging, airlines, anybody who needs oil made decisions. You made the decision whether or not to buy gas that week or just to let it ride and see if it would come down. I mean, these are all economic decisions we all make. But if the price is set, regardless of what's happening, then everybody is not making decisions and the money's not being deployed correctly, or at least with any nuance or brain power. And so I think that Kevin Warsh wants to return to a world where the economy is made by good decisions and bad decisions, not some decisions that a bunch of ding-dongs with fake mortgages make, because they hate the president. Like that's not a fair way to run an economy, and I think he's correct in that.
We will get May PCE later this week, so can't wait to read all those articles as they continue. We'll get FedEx earnings, Qualcomm Investor Day coming up as well. Anything top of mind for you, Ben?
I think Micron earnings Wednesday evening, and Micron's been a big meme stock. I anticipate they'll continue to have good earnings, but I do wonder if it'll be good enough. And then, I'm curious to see how trading takes place. I think it'll be a relatively quiet week, even though we're coming to the end of the quarter. I just feel like there's not a ton in the news. People want to move away from the Iran headlines, and I think it'll be a good week of price discovery and hopefully settling down.
Yep. Good stuff. All right. We will wrap it up there. We'll be back tomorrow morning. Y'all have a great day. Talk to you soon.